Welcome to this Friday edition of Inside India in what has been a very eventful week. I'm Sri Jegarajah. Let's take you across the headlines. We are seeing some market resilience as investors seem to be taking tariffs in their stride so far. The Indian market looks set to extend gains. But individual sectors are starting to see the fallout from garments to autos. We'll be hearing from India's Federation of Automobile Dealers Associations about the impact coming up. And India moves to strengthen ties with BRICS countries with possible visits by both Brazil's Lula and Russia's President Vladimir Putin in the coming year. Let's start by taking a look at the Asian markets as we round off the week and some interesting moves and some interesting dispersion. Let's start with the positive end of the range, and that's the Nikkei, making a run on 42,000, in fact, up by 2.2%. Lynn will tell us why in a short while. Elsewhere, we are seeing less conviction in Australia, on the Kospi, on the Hang Seng, Straits Times and Thai index, the SET, which is down by about 0.5%. Elsewhere, we're seeing some relatively middling gains. Let's move the conversation towards India, and the Indian markets join us in about 45 minutes' time. Yesterday was quite important, despite India and the markets in the macro now having to deal with 50% tariffs potentially. And yet, the market was relatively stable at the close yesterday. In terms of today's price action, it looks as though we're going to kick off at around 24,642, which in fact would represent a bit of an edge higher, actually, for the benchmark equity session, considering where we left off yesterday, which was just a shade below 24,600 dollar rupee exchange rate at 87,473. Now, let's just get more on what we were talking about in our headline and this realignment, and a lot of interesting developments happening regarding the BRICS. Indian Prime Minister Narendra Modi and Brazil's President Lula discussed US tariffs and trade ties in a phone call on Thursday. Both Brazil and India are among the hardest hit by the latest duties from President Trump, who has imposed a 50% tariff on goods from the two countries. Lula confirmed a 2026 state visit to India and said he would raise the issue at the next BRICS summit. The leaders also agreed to boost trade and expand the Mercosur-India deal. In the meantime, Russia and India holding bilateral security talks in Moscow, where they talked up their commitment to a strategic partnership. India's National Security Advisor Ajit Doval also met with Russian President Vladimir Putin at the Kremlin. According to the Interfax news agency, he said he was looking forward to President Putin visiting India by the end of the year. Trump has doubled tariffs on India for its Russian dealings as he tries to pressure Moscow to end the war in Ukraine. Worth reminding everyone that India and China are top buyers of Russian oil, so this is all potentially going to have ramifications for global oil markets and quite possibly inflation. Now, speaking at an event in New Delhi, Prime Minister Modi talked about safeguarding the welfare of Indian farmers. He did not specifically mention US tariffs, but said he is ready, quote, to pay the price.
India will never compromise on the well-being of its farmers, dairy sector, and fishermen. And I know personally I will have to pay a heavy price for it. But I am ready.
And let's not forget that agriculture, increased market access is a red line historically that India has not conceded on. In the meantime, India's textile sector is sounding the alarm on US tariffs. Pearl Global, which supplies to US retailers Gap and Kohl's, is facing an ultimatum. Its clients want the company to either share the 50% tariff burden or shift production out of India. Pearl Global is now exploring its 17 factories in Bangladesh, Indonesia, Vietnam and Guatemala to bypass the new duties. Experts feel the sector that directly employs 45 million people could go further down the hill after the tariffs kick in on August the 21st.
Government sector has already been hit because we lack competitiveness, and over the past couple of decades we have lost a lot of market to both Bangladesh and Vietnam. So in a way this sector has been sort of going downhill, and I think this situation could get worse.
Japan's trade negotiator, meanwhile, has been in Washington, D.C. this week on a mission to sort out the finer details of the trade deal with the United States. Lin has the latest, and judging by the market reaction on the Nikkei, the optics seem to be moving in the right direction.
Indeed, it sounds like we are getting some clarity, although there are still questions that remain. What Akazawa-san, who is the lead trade negotiator from Japan, has said this morning is twofold here, that there will be an executive order that will be issued in terms of the agreed lower auto tariff, and that the Japanese side has received confirmation from the US that they do indeed have an exemption when it comes to overlapping or so-called stacking of tariffs. And this has all come about because we know that the so-called reciprocal tariffs, they came into effect midday yesterday. There was a revised executive order that listed the European Union as being a beneficiary of that exemption. The Japanese felt that that was also part of the agreement, although Japan was not explicitly stated in the document. Akazawa-san saying that when the executive order is released by the US president in terms of the auto tariff cut, that they will also clarify this point as well. And that is also contrary to multiple domestic media reports that arose yesterday. So indeed, that could be helping the market sentiment today, the rally that we've seen both in terms of the broader based topics as well as the Nikkei 225. What's also been helping is the earnings picture, with a number of heavyweights reporting yesterday. SoftBank Group is rallying, and also Toyota shares are up, even though they did report yesterday that the hit in terms of US tariffs for this fiscal year, $9.5 billion. So normally, from a nominal perspective, Sri, much higher than the other automakers.
That's the major sore point, isn't it? Automakers and agriculture. Lynn, thank you very much indeed for that. Let's move the conversation to India's auto sector, now facing a new blow from Trump's tariffs. With the industry already in a slowdown, this could be a double whammy for auto parts makers. The US, remember, accounts for about a third of India's auto component exports. In fiscal 24, India shipped nearly $7 billion worth of parts to America, according to industry estimates. Let's get more on this with C.S. Vigneshwar, President of Federation of Automobile Dealers Associations of India. Sir, thank you very much indeed for joining me on the programme. 25% tariffs, that was already a big challenge for your industry. Now this is potentially doubled to 50%. How is the industry adjusting and reacting to this?
Thank you, Raja, for having us. Yes, it's something which has come as a big surprise for us. We probably are very, very new into this one. We probably need to see how things pan out, because the tariff numbers from the US are pretty dynamic and it keeps changing every day. Most importantly, we need to consider our sector, which provides employment to millions of people in India. At the same time, we also need to see that our national security, our food security is also taken care of. So it's not an easy challenge, but I'm sure the negotiations are still going on. And there are still ways where we could, as two countries, sit down, talk it out, and also be winners on both sides.
Let's hope so. And there is a 3-week window before the tariff rate goes up to 50%. What then is your message, sir, to the government? Does the Indian auto industry need government support to get it through what appears to be quite a challenging period? And your point is very well taken in terms of the unemployment issue and the unemployment risk. And it's a challenge that other industries have warned off as well, whether it's textiles or whether it's the jewellery industry in India.
Raja, one of the biggest things about India is the large domestic economy. The domestic economy is pretty large, and unlike a lot of countries which depend on exports, for us it's predominantly the domestic sector. And the domestic sector in terms of GDP or in terms of most consumption patterns has been growing quite strongly. So yes, there is a risk of unemployment. There is a risk of falling of fallen incomes. But all these things are not absolutely catastrophic. There's a strong, in case the worst case scenario plays out. We also have other countries where we could export to, where we could shift our export basket. But it's not going to happen overnight. It's going to take a lot of time. Hopefully they sort it out. And if they don't sort it out, we need to also work with the government to see how they could help us out. I'm sure the government can't help us completely out of the situation, but there are other ways where we could mitigate the risk. As I told, the domestic sector, even in the auto sector, has been growing quite strongly. So there are other options available.
Can you break down which verticals within the industry have the most to lose?
You're talking about the automobile industry?
Yes, sir.
We hardly export any fully made vehicles to the US. So it's mostly the component. And as you said, the component sector probably accounts for about 7 billion rupees per year, $1 billion per year. So it's not going to be a small figure, but it's going to be big. But the worst case scenario does play out. We have to make sure that we are able to mitigate these risks. There are other markets available. You have Europe, you have Asia, you have Japan, and there are also ways in which we need to probably shift the consumption pattern back to domestic production and consumption. So it's not going to be easy, but at the same time, if it comes into, I mean, as you rightly said, India has been pretty protective regarding our agri sector, our fishermen, and our poultry sector, our dairy sectors have been something which has been closely protected. It could be because of food security, for national security, defense too. So we need to first take care of our primary interest, which is the interest of the nation. Yes, we also will be affected, but at the same time, the security of the nation is very important. But however, we dearly hope that some kind of a deal can be thrashed out. Otherwise, it's not going to be great for anyone concerned. And not only that, even for the US, all these tariffs are going to lead into some kind of inflationary pressure, which how they're going to manage, because they have the midterms coming up and they need to make sure.
Quite right. Tariffs are taxes on the consumer. So how concerned are your FADA members about supply chain turmoil? Because as I see it, passenger vehicles, commercial fleets, electric vehicles, heavily dependent on imported semiconductors. If that part of the supply chain becomes problematic, then there are going to be problems for the industry.
There's not much which is coming from the US to India. So we could, even what little comes in, we could probably transfer these parts baskets to some other countries. But for us as a industry, as an automobile industry, for us, it's very important that other industries in the country do well. If they do well, we do well. They keep buying our vehicles. So that would be a big concern, that the whole economy will take a hit and therefore we'll be affected by it. But in terms of direct production, I don't think we'll be much affected by any parts coming from the US.
Just looking at the export numbers, the last data that I saw, automobile exports from India rose 19% to over 5.3 million units in the last fiscal. Given what we know, is that number at risk of being lower and falling this fiscal?
Not really, because most of our exports are into Asia, into the Middle East, in some parts of Europe and South America. So very little goes to North America. So I don't think these tariffs should really affect the full, completely built units.
If we were to look at specific Indian auto component manufacturers, Bharat Forge, Sona BLW, Samvardhana Motherson, how what sort of sense are you getting, Vigneshwar, as to how they are managing these potential problems, whether it's on the supply chain, whether it's higher costs, and whether it's access to the US market?
So these are large companies, and they also have units and production units outside India. So probably they'll be shifting it over there. But as I said, these are large numbers for in terms of to contend with 50% tariffs, around 25% tariffs. But the issue is these numbers keep changing every day, and we really don't know what's the final number. So we probably need to wait it out for a few more weeks. As you rightly pointed out, there are 21 days for us to thrash this out with the American counterparts. I'm sure that the best negotiators are negotiating these deals across. And unilateral tariffs hurt everyone concerned. It's not that America is going to go away unscathed, because they also have midterm polls coming, inflation pressures are there.
Yes.
So there are some ways. I mean, yes, I understand that India is being used as a lever to sort out the issues with Russia, but I don't know how long these things can continue, because you talk about, I mean, you look at Turkey, you look at China, they pretty much buy equal or slightly more amount of oil from Russia. So there is a lot of people who would be affected by this, and we need to see collectively what best can be done.
Vignesh, Tata Motors via JLR, the luxury end of the market, are they most exposed, or is there enough demand within the core Indian market to see them through?
There's enough growth here in the Indian market. At the same time, most of the JLR products, probably which are going to be exported into the US, would be made in the UK. So, and the UK and the US have thrashed out their own agreement. So I don't think that should affect Tata as such.
Understood. Sir, very grateful for your time and your analysis. Thank you very much indeed for joining me on Inside India. CS Vigneshwar there from FADA, Federation of Automobile Dealers Associations. Coming up on the programme here in Singapore, it's all about SG60 this weekend. We'll bring you the details right after this short break. Welcome back. Singapore is glowing in red and white as the city-state gears up to celebrate its 60th birthday tomorrow. JP Ong is live on the ground at the party at the outdoor theatre at the Esplanade. Hi, JP.
Hi, Sri. Good morning. And yes, a momentous next couple of days for Singapore as the city-state gears up to celebrate its 60th year of independence. And actually, the story for Singapore over the last 6 decades really is a story of a country that's been able to build something out of nothing. You can take a look at how far this economy has grown. And it's really grown by leaps and bounds over the last 6 decades. You'll notice that it went from being one of the smallest economies in Asia to being the second largest in Southeast Asia at over $500 billion US dollars. That is remarkable for a country of only about 6 million people or less than 6 million people, and really also ranking high on a number of other metrics in terms of quality of life. Singapore, in terms of home ownership, has never dipped below 87% over the last 25 years. And again, remarkable, we're talking about making sure that citizens here have access to affordable housing for the most part. In terms of literacy and the percentage of a population with a college degree or university degree, and also in terms of healthcare, Singapore also ranks among the top actually in the entire world. So again, you're seeing that this is a country that's really developed from a backwater, no offense, to really being one of the leading trading hubs and one of the most modern countries in the world. They do have a number of challenges moving forward as well, especially because trade is so important to this country. We're seeing a breakdown of the global trade, or that could pose headwinds for this developed economy, and also an aging population that they will also have to address. Now, what's going to be key for Singapore is really evolving, as they have done countless times during their history, and continue to punch above their weight. And just to highlight just how Singapore punches above its weight, not just here, but internationally, take a look at this chart that highlights foreign direct investments into India. And for the 7th straight year, it's been highlighted that Singapore is the largest source of foreign direct investments into India. Now, this is important because Singapore will have to look outward to actually create more growth that can feed into the city-state. But Singapore is also becoming a key partner for India as it tries to not only broaden its manufacturing base, but also move up the value chain and be able to move successfully into higher-end manufacturing processes, the same way Singapore has done successfully over the last 60 years. And this sets things up for Singapore to see if they can continue to evolve, continue to punch above their own weight as they look forward to the next 60 years and beyond. Happy birthday, Singapore, and back to you, Sri.
Enjoy the party, JP. Great point about Singapore-India cooperation, and we were speaking to the Chief Minister of Andhra Pradesh, and he's looking to Singapore and that model to build the knowledge economy. Thank you. Right, let's bring in Monica Petrelli now to focus on tourism. And Monica, tell us about Singapore's ambitious plans to stay ahead of the competition, whether it's from Thailand or Indonesia or other venues and destinations in Southeast Asia.
Absolutely. So, well, I can tell you one big change that we're seeing, not just from Singapore, but definitely here, is how Singapore is moving to attract tourists in the future. So one big difference now compared to the past is focusing on tourism receipts rather than arrivals. This used to be a straight body count. You wanted to see how many people you could attract, almost bragging rights, to come to your city, your country. Now it's about the almighty tourist dollar. Now, who and how Singapore is targeting? Well, take a look.
It's got swaying palms, year-round sun, and nearly 140 miles of coastline. But travelers to Singapore aren't looking for a typical island getaway.
We've ventured through Gardens by the Bay, Marina Bay Sands.
I plan to go to Universal Studios, and after that, like tomorrow, I'm going to Night Safari.
Attractions like these are integral to Singapore's ambitious Tourism 2040 strategy, which aims to increase tourism receipts by more than 50% in the next 15 years.
So to lure travelers, the government continues to focus in on world-class attractions like Jewel, Changi Airport here. But it's also leaning into cruising, as well as so-called destination hotels.
Raffles Sentosa, Singapore's second Raffles hotel.
Welcome to Raffles Sentosa.
And first, All Villa Resort opened in March, followed by the Mandai Rainforest Resort by Banyan Tree, which gives visitors to Singapore's 5 zoological parks a place to stay overnight. Resorts World Sentosa opened Minion Land inside Universal Studios Singapore, as well as a new oceanarium, which is triple the size of the older Sea Aquarium.
It's just the beginning. So over the next few years, all the way down to 2030, we will continue to launch new attractions.
Also ahead, an $8 billion fourth tower at Marina Bay Sands, which broke ground last month alongside Singapore's Prime Minister Lawrence Wong. The all-suite resort is set to have shopping, gaming facilities, and a 15,000-seat arena to help attract live events to the island.
So the fourth tower is being constructed in this space right behind me. It's set to add an additional 200,000 square feet of conference area to the city center, which could help the government achieve its goal of tripling revenue from business travelers. Singapore estimates they spend double the amount of tourists.
But there's another group that's critical for Singapore to achieve its long-term goals: stopover travelers, a segment set to jump after Changi Airport's fifth terminal opens in the mid-2030s.
We are right in the middle of this massive region that comprises, especially for China, India, Indonesia, right? So these are three massive economies with huge population growth. There will be a lot of travel demand from these countries.
Still, challenges remain. Convincing stopover travelers to stay longer and tourists to make the city-state a repeat destination continue to be an issue. The country faces rising competition from Vietnam and Japan, and there is, of course, the issue of costs, with Singapore often ranking among the most expensive places in the world to live. However, some travelers say they aren't feeling the pinch.
You always hear in Europe that Singapore is extremely expensive. That's not true.
Singapore turns 60 this month. Ahead of this milestone, it's planning for a future, one based on innovation and growth, and an increase in interest from outsiders who will pay to visit a small country with big ambitions.
Now, Singapore's tourism receipts did drop slightly in the first quarter of this year, but officials quick to point out that's because the first quarter of last year was a huge one for the country. This was, of course, when we saw Taylor Swift coming to town, also Coldplay and the Singapore Air Show. So a hard quarter to beat. But we do see Indian travelers spending about the same. In fact, $342 million for the first quarter of 2019 versus the first quarter of this year. That's with about 200,000 fewer travelers, though. So those who are coming are spending more.
I've lived here for 25 years, and it never ceases to amaze me that it's a small island, it's a small state, but I continue to find these undiscovered niches of Singapore that continue to inspire me and continue to be very, very magical. Thank you very much indeed for that, Monica. Right, coming up on the programme, Axiom Space's Tejpal Bhatia is strapping in with us next to discuss private space flights and India's rising ambitions. Don't float away. Some developing news from the Middle East region. Axios reporting that Israel's Security Cabinet has approved Prime Minister Benjamin Netanyahu's plans to take over control of Gaza City. The move still needs approval by the full Israeli cabinet, which may not meet till Sunday. Prime Minister Netanyahu has been pushing for control of the entire Gaza Strip, citing security reasons, but says Israel won't govern it. He suggests handing it to Arab forces instead. Prime Minister Netanyahu did not give any details of which Arab countries could be involved in this handover. In the United States, President Trump defending his move to fire the head of the Bureau of Labor Statistics last week. He called on Stephen Moore from the Heritage Foundation and co-author of the book Trumponomics to his office overnight, where Moore pulled out charts with stats that compared Trump's term to President Biden's. Moore suggested BLS overestimated the jobs created in Biden's term and that the overall standard of living in the US has improved since January. And President Trump has named Stephen Moran, currently chair of the Council of Economic Advisers, to replace outgoing Federal Reserve Board Governor Adriana Kugler. If confirmed, Moran will serve out Kugler's term, which expires at the end of January next year. Moran's appointment is still subject to the Senate's confirmation, but in a post on Truth Social, the president said they will continue to search for a permanent replacement, suggesting that Moran may just be in a caretaker position. Moran has long argued for reforms at the Fed and would be another voice in support of lower interest rates. Moving on to space travel, the Axiom 4 mission wrapped up last month after a successful 20-day voyage. On board was Subhanshu Shukla, the first Indian astronaut to visit the International Space Station. The trip marked a big milestone for India, Poland and Hungary, their first crewed spaceflight in over 40 years and a fresh boost for India's space ambitions. I'm delighted to say we can talk more about this, and let's bring in Tejpal Bhatia, CEO of Axiom Space, the company behind the AX-4 mission. Tej, great to have you on the program. Just characterize or explain to us why AX-4 was such a milestone moment.
Yes, well, first of all, thank you for having me. And, I get very excited just even seeing your intro. It's a milestone moment for many reasons. I'll speak specifically for the mission and the crew first, and then about Axiom and then what it means for the industry. The AX-4 mission was the return to space for 3 nations. India, as you mentioned, as pilot of the mission, Shubhanshu, his call name is Shuks. This is India's first astronaut to the ISS, India's second astronaut ever, and 40 years later after Rakesh Sharma went to space. For Poland, it's almost the same exact story. First astronaut to the ISS, also 40 plus years after their last astronaut, and same for Hungary. I believe it was 45 years almost later. So it's 3 nations going to space, returning to space for the first time after generations, and going to the ISS for the first time with a private company, a commercial mission sending government astronauts, expanding the access to the International Space Station, something that's never been done before. And for our company, this is the 4th mission. We are an 8-year-old startup. Our purpose, we were formed to build the replacement to the International Space Station. Axiom has the exclusive contract to attach our modules to the ISS before the ISS is retired. And these missions represent what we call precursor missions, showing that we can go to the International Space Station, take governments up that had never been before, and then prep the commercial platform that will replace the ISS.
Thank you for that, Tej. And pardon the pun, but is this the launch pad for more future collaboration between India via ISRO and Axiom? And what is that collaboration going to look like then in terms of future projects?
Yes, it is the perfect pun, actually, considering that they actually launched a human to space. And, the ultimate demonstration of power, whether that be hard power, soft power, economic power, diplomatic power, what I like to call the power of hope and inspiration, where billions of people, hundreds of millions of girls and boys watch this, and this is a pivotal moment for each of them. I remember my first memory of space when I was 3 years old. My parents emigrated from India in 1970 to the United States. And when I was 3 years old, they took me and my sister on vacation to Kennedy Space Center. And I remember that moment, and it literally set the trajectory of my life. To engineering, entrepreneurship, exploration, and even then, space was a daydream for me. Only 5-6 years ago did I start realizing that this is an opportunity in time where I could invest my money, my time, my energy, and now children see that this is a reality. We only started talking to India less than 2 years ago, and this was a joint mission enabled by Axiom, again, an 8-year-old startup, where the White House, the government of India, Prime Minister Modi, ISRO, NASA all came together in record time. The two largest democracies, AKA the two largest bureaucracies, being able to pull a mission together like this in that time is almost insane, almost unbelievable. And we've seen it time and time again with the Saudis, with the Italians, with Sweden, Poland, Hungary, Turkey, all have moved at record speed because they see this opportunity for commercialization to be a launch pad, but also a leapfrog moment. With India, this is the beginning of a very large partnership. Now, India's space ambitions have really increased over the last several years, arguably making them, the fourth largest space power in the world. One of a few nations that has the ability to launch off the planet. And Shubhanshu's mission here, going with us, going with NASA, was also a precursor and a training for India as they build out their program.
Tej, how then can these projects and what you learn from these projects be applied to the terrestrial world and the challenges that we know exist in healthcare, in education, and in agriculture, to use the Indian context?
Very much so. And I'm gonna add a fourth one, just the economic context as well. So, this is very much a diplomatic and scientific mission. Most missions are and historically have been. So for India, the research that they did, the crew, the X4, the research they did, it was over 60 experiments, and it also represented over 30 countries. So this wasn't just the four nations, US, India, Poland, and Hungary that were up there. They brought partnership and international collaboration from all countries of the world and across all industrial sectors. So you mentioned a few like agricultural, Earth observation, health sciences. The experiments that they can do in the microgravity environment with the absence of gravity really teaches us two things. It teaches us about our bodies and what the environment of space does to it, and also the physical universe. What happens when you remove that force, and how do molecules and proteins interact with each other in this environment where they're not settling down. And what ends up happening is we learn how to live in space and what it would be like for us to live for extended periods of time. But we also learn the effects of certain drugs or how certain cancer cells behave, and then we're able to apply that down here on Earth. So we're already seeing several things that are happening, and this is getting to that fourth context, which is the economic context, is we're learning the commercialization of all these discoveries. So for example, cancer research and drug discovery that's been done in low Earth orbit is now becoming commercialized. I'll give an example in the US, where certain drugs being tested in space are going to FDA clinical trials on humans. So we've seen drugs that have been tested on AX1, 2, 3 go into human trials on Earth and then be continued to be tested on space on tumor organoids. And those drugs that will prevent cancer obviously help us down here. And then those business models that accelerate intellectual property obviously builds economic value for us here terrestrially.
Tej, do you find it ironic or somewhat paradoxical that there's this great international collaboration in so many different fields of science and technology going on in the ISS between countries that are virtually at each other's throats, whether it's through trade or whether it's through conflict on planet Earth. So can the cooperation that you are involved in, can that be used as an example or a way to leverage and to learn from and maybe overcome the problems that are happening in the real world?
Space has always been the ultimate platform for diplomacy. You know, we've seen this in the first space race. We've seen this over time. We've seen this in the last several years, you know, with conflict and war going down here on Earth, where up there, we're all one. And there is an irony and a beauty to that. And the AX-4 mission shows two things. It does show the international collaboration. It does show the diplomacy in a geopolitical sense. But what it also shows is that businesses, particularly startups, can be a driver and a force for diplomatic progress. And the other irony that I see in all this, and I'll speak specifically from my perspective as the CEO of a multi-billion-dollar space corporation, is the fact that we're at each other's throats, the fact that there's this conflict here on Earth is almost marketing for the importance and the value of this kind of international collaboration happening on the B2B level. Now, what you see here is these are government astronauts that are flying with a commercial company. I see that as B2G, Axiom selling services to those governments, sending their astronauts up. But what you don't see is the intense and immense industrial collaboration of all industries from these nations and many other nations. And those are all B2B interactions. And that's the future. And from there, I think this is where this commercial platform will drive a lot of diplomatic interest for all of us.
The final question, Tej, is India's projected roadmap for its own space station through Bharatiya Antariksha Station, launching its first module in 2028. Just walk us through how Axiom is going to be instrumental in realizing that.
Yeah, so as I mentioned, Axiom Space has the exclusive contract to connect our commercial infrastructure, our modules, to the ISS. So that's a very unique position for us to be in the market. The ISS will be retired in 2031. And when by retired, I mean it will deorbit, it will burn in the atmosphere. So that platform, that lab will be gone, and it'll be replaced by commercial platforms, specifically Axiom Space. Now, also remember, China has its own its own space station. They have now formed partnerships with other countries, Pakistan being one to announce recently their partnership. Now, the Chinese station has been up since 2022 and been fully manned. So you have these two platforms right now, the Chinese platform and the international platform. International platform going away, commercial platform Axiom Space being the replacement. India has its ambitions to build its own station, multiple modules, and I think that's wonderful. And what I think you're going to see is an interoperability around the world. And the next stage of international cooperation, or ISS 2.0, will be a ultimate consortium and collaboration across nations and industries that are part of this new era. Where you're going to see that partnership, if it's a separate station or a connected station or an interoperable station, what's very clear is no single country and no single company can meaningfully get off the planet and expand humanity off planet and to other heavenly bodies alone. And this is very clear, and this is where the Axiom 4 mission shows beautifully the necessity for us to collaborate from an engineering standpoint and from a health standpoint and from a business standpoint. Nobody can do this alone. But what we do need is leadership. There's a large vacuum in leadership, and this goes back to the previous discussion of the turmoil and the chaos and the rhetoric, which is creating this vacuum of leadership. And I think India is doing a wonderful job stepping into that position.
Yes. I really enjoyed what you said about how space can provide the ultimate forum for diplomacy. Tej, this has been a fascinating conversation. Thank you very much indeed for joining me on Inside India. Tej Bhatia there from Axiom Space. Counting down to the market open in Mumbai. We're back in 2 minutes. Welcome back. Let's take a look at the Indian markets, which are just joining the trading day as we round off the week. And what an eventful week it's been for the Indian markets and the macro. The Nifty 50, the benchmark, opening at 24,560 or thereabouts, just very fractionally lower. Let's give you the exchange rate. Dollar rupee at 87.6. So that means the Indian rupee is still under some pressure against the US dollar. Shares of Titan are looking like this. The Indian jeweler posted a 50% jump in quarterly profits as gold prices rose. The stock up by 0.3% in early Indian trading. The company also saying consumer confidence remains intact. Titan might set up a manufacturing facility in the Gulf region to maintain low tariff access to the US market. Let's give you shares of Sri Lotus Developers. They are down by 1.2%. The luxury real estate firm made its market debut this week, closing the listing day at a 31% premium to its IPO price of 150 rupees. The strong debut signalled investor confidence in firms with luxury property portfolios. Proceeds from the IPO will help fund Sri Lotus's ongoing projects, including Amalfi and Varun. I'm delighted to say now that Anand Pandit is joining us now, Chairman and Managing Director at Sri Lotus Developers and Realty. Anand, welcome to the programme. First of all, can we start with strategy in the business model, and how are you looking at potential redevelopment opportunities given the regulatory hurdles and approvals that are necessary to do so?
First of all, thank you for having me on your show, and good morning to everyone. As we know, the whole Mumbai is going for a spree of redevelopment. According to one recent report, almost 30,000 buildings or cooperative societies, housing societies, they are about to go for redevelopment. So we can see a huge potential. As far as Lotus Developers is concerned, our model is to be in ultra luxury category in redevelopment. What does it mean by is what we do is we make the partnership with cooperative housing societies. We remove their old building and make a ultra luxury building and provide them space back with little enhanced space, and fully done up apartment we provide them, and ultra luxury space we give them. This is what our model is. This leads to 2-3 things. One is we don't have to spend money on buying the land. As we know, Mumbai land are so expensive. That's one. Number two, good locations are not available anymore because already the housing societies or maybe other buildings has taken over these good spaces. Third, since the buildings are already established there, or societies buildings are already there, we have very low risk of any legal issues. Now, as far as red tapeism or bureaucracy is concerned, in the business of redevelopment, rather government is encouraging us to, giving us more floor space index, FAR or FSI, whatever we say. And recently they have come out with a new guideline, development control regulation, which is giving us a lot of benefits. And especially when it comes to redevelopment of societies, we don't find much hurdle. And things are very smooth actually.
Anand, what do you say to critics, though, who say that the luxury developers like Sri Lotus are aggravating an affordability crisis in the lower end and the middle end of the housing market?
I would say it's like a pyramid. In the pyramid, there are all different levels. So affordability is I would say it's very subjective. Something which is not affordable for me could be affordable for you. So I don't go with that narrative, but it's very important as a developer, you position yourself depending on your micro market, depending on the location of your project, and depending on your target audience, what you want to sell it ultimately. So we don't segregate those all different markets. We are completely in luxury space. So we don't find that issue of affordability.
And you don't have any intentions to venture into maybe a mid-tier part of the market that caters towards the middle class, which is where the need is, admittedly. And is that because it's just not viable? The margins are simply not there.
Very right. So what I can see is every developer has got their own niche business and their own niche expertise. Our expertise is in ultra luxury. So I think we are not good at maybe, or we don't have that experience as for mass market, mass housing. So we want to keep ourselves in ultra luxury and luxury space only. And I could see that our market is getting bigger and bigger, because everyone wants to move in that pyramid from bottom to up. So that market is becoming bigger. So we'll stick to our luxury and ultra luxury only.
Anand, if the government made it worth your while, if they offered incentives, a package of incentives, subsidies, payouts, however you describe it, from a policy point of view, would you consider moving into the mid-tier part of the market to hopefully address this affordability issue?
No, I think the advantage of all these policies are across the board. And yes, what you are saying is correct. And especially when you are in lower tier, yes, you get more advantage. But as I said, our focus is only on luxury and ultra luxury. And especially, as you know, Mumbai is particularly having maximum billionaires here. And here, this is the commercial capital of the country. So the space for ultra luxury, or requirement for ultra luxury is large. So we want to be in that space only.
Understood. Anand, you're not the only one, though, are you, at Sri Lotus? It's a very crowded segment. Isn't the luxury real estate market becoming saturated?
There are two aspects of it. Number one, the reports which come out about luxury, everyone is making this with the numbers. So like in some of the reports, they are mentioning about 2 and 2.5 crore and above apartments are called luxury. But I don't see that that can fit in Bombay's landscape, because 2 and 2.5 crore rupees, you don't get anything. So those reports are in a way very theoretical reports, I would say. That's one. Second, luxury or ultra luxury is becoming like a lifestyle rather than a price tag, I would say. Even a mid-range price tag also, you can provide ultra luxury. So we are more focusing on that lifestyle rather than just the price tag.
Let's talk about that lifestyle, because the December private placement attracted investments from Amitabh, Shah Rukh Khan, Hrithik Roshan. How are you moving forward with those high-profile relationships, and what have they contributed? Sorry, Anand, we've got about 10 seconds left. You have to be quick.
So we are operating in that landscape of Mumbai, western suburb, where all these celebrities are living here. And they are our regular customers since almost 20-25 years. So they are our customers also, and now they are our investors also, because they have seen our journey.
Understood.
They have seen our product. They have seen our
and it gives you
delivery.
cachet. Anand, we're going to leave it there, sir. Thank you. We're back in 2 minutes.